Thank you for waiting. Once again, thank you very much for joining Blockchain Global Governance Conference, FinSum Blockchain Business. Now we would like to start the session on legal, accounting, and tax issues in structuring STOs. Let me introduce the speakers. Principal at Financial Services Division and DPP Audit Quality, KPMG Azusa, Mr. Tomokazu Sekiguchi. Partner at Anderson, Mori and Tomotsune, Mr. Ken Kawai. And partner at KPMG Tax Corporation FinTech, Mr. Kenta Kobayashi. These three will be the speakers for today. Let me pass over to Sekiguchi-san.
Hi, everybody. I know that this is the final session for this hall, and the title is Legal, Accounting, and Tax Issues in Structuring STOs, and I would like to spend the next 40 or so minutes on this topic, and I would like to have a round of self-introduction. So why don't we start with Kobayashi-san.
Can I remain seated? My name is Kobayashi from KPMG Tax Corporation. My specialty is tax. And originally, I had been a student at the graduate school learning tax, and then I joined Arthur and Anderson, the accounting firm, and then I learned about the taxation of financial institutions, and then after Anderson, I joined KPMG. So throughout my career, I have been responsible for taxation for financial institutions, but recently, I have found that financial institutions and other businesses they are becoming more closer. So taxation issues that only arose for financial institutions in the past are now being experienced at other companies, especially for tech companies. So I think that these two are becoming closer together in terms of taxation. So it is a very big pleasure for me to join this panel. Thank you very much.
Thank you. I'm Kawai, partner at Anderson, Mori and Tomotsune. Thank you very much for having me on the panel. Now, mainly, I specialize in blockchain and crypto asset security tokens. So I cover a broad space of fintech, and I'm dealing with startups and large financial institutions both in Japan and abroad. Initially, let me tell you about my background. I joined one of the mega banks in Japan, and I spent the following decade or so as a derivative and FX dealer. But a little over 10 years ago, I switched gear, and I've been practicing law ever since. And there's a lot of things happening around us, so it's very stimulating. But we have seen growth in the number of STOs. We have seen growth in STO deals, and I would like to share my experiences from looking after STO deals in recent years. Thank you very much. Now, this is Sekiguchi, KPMG Azusa.
Myself, I belong to the Financial Services Division, and fintech innovation related services are my specialty. Fintech and STO seems to be drawing a lot of attention these days. And my background, before joining KPMG Azusa, I was at the Financial Services Agency for about 4.5 years. And then I was at the entity to set the accounting standards, SBJ. And thereafter, so based on that experience, I hope to talk about accounting standards and so on today. So
So why don't we start with commenting on accounting, law, and tax? What are some of the important issues that are on your tables with regards to SEOs? So why don't we start with Kawai Sensei to talk about the legal aspect?
this is Kawaii, and so I would like to talk about the legal issues surrounding STO, and I'll be speaking about 10 minutes or so. First of all, security token or digital securities. Starting from May this year, the situation has changed. In the past, tokens issued on the blockchain, if they had a security-related character, there was no discipline unique to that. So the Financial Instruments Act was applied directly. However, this does not really fit the ages because now the security token is widely distributed. So there was a lot of discussion around how the act should be revised. And last year, the act was revised, and this has come into effect from May this year. So in the past, the paragraph 1 type, so traditional securities, Article 2, paragraph 1 of Financial Instruments Act specify the traditional securities, and there is also the so-called deemed securities under Article 2, paragraph 2. For example, the trust beneficiary rights and the collective investment fund scheme interest. So there was a separation. So the traditional securities under Article 2, paragraph 1 and the trust beneficial rights or the collective investment scheme interest under the Article 2, paragraph 2, or the bottom part of this drawing. So securities, deemed securities were not assumed to be widely distributed. However, if there are tokens, then there will be a frequent circulation. And so there were questions as to whether the regulation should be the same or different from paragraph 1. So the electronically recorded transfer rights were established. So in the case they are tokenized or not tokenized is now separated. If not, they are tokenized. If they're not tokenized, then they will remain as paragraph 2. But if the rights are tokenized, then it will be regulated under paragraph 1 as the traditional securities. So there are various requirements for paragraph 1, for example, submission of the registration statements. But such rules did not apply to the deemed securities under paragraph 2. But if it is under paragraph 1, disclosure requirement will apply. Also, for deemed securities, the Type 2 FIBO, financial instruments business operators, were applied. However, with regards to the intermediary, if the tokenized tokens are under paragraph 1, then the type 1 financial instruments business operators need to be the intermediary. However, the situation will be different in case of self-placement. So by the electronic rights, trust beneficiary rights, and the collective investment scheme interests are treated differently from before and will be placed under Article 2, paragraph 1. So as mentioned, the trust beneficiary rights or membership rights of a general partnership company or limited partnership company and limited liability company and interests under the collective investment scheme are now considered under the electronic recorded transfer rights. However, not everything that is electronic will be considered as electronic recorded transfer rights. In the case the electronic ledger is created only for internal administrative purposes, then the situation is not so different from before. So how this token is indicated is important. And the FSA's guidance is that in principle, whether contract-wise or in actuality, when the electronic ledger is rewritten or changed, which means that the financial value or the token is transferred, and the transfer of rights are conducted in a continued series of actions, then this will be considered as electronic recorded transfer rights. When the financial value or the token is transferred, then and if the transfer of rights occur at the same time, then this should be considered as electronic recorded transfer rights. So of course, for trust beneficiary rights and collective investment scheme interests, these are deemed securities could be tokenized, but also other stocks and bonds could also be tokenized. So the electronic recorded transfer rights have a wider definition. In Japanese, sometimes it is shortened and sometimes called denyu, but there are different categories under the electronic recorded transfer rights to be indicated on securities. The first is tokenized rights to be indicated on securities, such as stock and bonds and so on. And the second category, specified electronic recorded bonds. The legal system is still being prepared, so this is not existing at the moment. And the third one, electronic recorded transfer rights, as mentioned earlier. And also number 4. So the rights are indicated on tokens, but are actually exempt due to lack of liquidity. If, for example, companies with a large capital or people, very affluent investors, the investors, then in such a case, it will be treated under paragraph 2. And under paragraph 1, disclosure requirements will apply. So in principle, if more than 50 people, not counting professional investors, will purchase the right, then it will be considered as requiring disclosure. And the registration statements need to be submitted. So what are the disclosure requirements? First, you have to submit the security report, as well as the semi-annual security report. That is the ongoing disclosure. And there are differences. For example, only selling to professional investors, or the total amount is less than 100 million yen, or sells to less than 49 investors. These are exemptions, but otherwise the disclosure requirements will apply. So this is the outline. And looking at the current trend, a majority of the cases are corporate bonds being tokenized. There are several projects to tokenize corporate bonds, and also trust beneficiaries. So among the securities, tokenization of the trust beneficial rights sometimes occurring as projects. So perhaps toward the end of the year, actual projects may start to be realized. That is it from me. Thank you very much.
Thank you, Kawai Sensei. As you've discussed, with the amended FIEA, Financial Instruments and Exchange Act, disclosure requirements are now in place. And as a part of disclosure requirement, You have to put together financial statements, and financial statements should be disclosed. Then, what about the accounting treatment? What are the challenges for STO from an accounting perspective is what I would like to discuss with these slides. This slide shows the background, what has happened so far. Why do we have to discuss accounting treatment in the STO context? I know many of you are wondering, but let me give you a background. ICO preceded STO, and for ICOs, there was no financial accounting standards, and there were ICO deals in Japan, and ICO's accounting treatment was not fixed. And accounting was a bottleneck there for the development of ICO, according to some critics. And that is why we now feel why the Diet members, legislators, feel the need for clarifying the accounting treatment of STO, and that is why there was a supplementary resolution at the time of amending FIEA. Since accounting for ICO could differ depending on the nature of a token issued, formulation of a guideline and other necessary measures must be taken after sorting out accounting issues, taking into consideration international debate, and that is why ASBJ, Accounting Standard Board of Japan, is looking at this issue, and ASBJ plans to disclose its exposure draft in and around September. And ASBJ is now focusing on their discussion on ERTR, or electronically recorded transfer right. Now, these are some of the issues that they are looking at. Basically, STO is a tokenized marketable securities. So you might wonder if there is any new accounting issues involved. But these are the four questions that we need to address. The first question we need to address is accounting treatment for those other than stock companies. So non-stock companies like Gourmet, Goshi companies, general partnerships, limited partnerships, trusts will be used as an issuance vehicle, but accounting treatment. We have clear set of accounting rules for stock companies, and stock companies are subject to audit, but non-stock companies, entities other than stock companies, the accounting rules are not that clear. So when in trying to clarify accounting treatment for STOs, then what should be the treatment of accounting? What should be the accounting treatment for companies or entities or vehicles that are not stock companies? And that is one issue. The first issue that they are trying to address. And the second question is the following, and Kawai Sensei talked about different discussions that are now underway. And I've been participating in different sessions during this event, and there are high expectations for STOs. Hybrid STOs. There are a lot of expectations for hybrid STOs or STOs in the middle ground, so to speak. There are a lot of high expectations for those, not just the equity investment, but perhaps something added on to equity investment or fund marketing has been talked about. So making STOs more attractive, rather in addition to just investing equity, token economy, issuance of stocks, shareholders' perks, and ancillary part that could be bigger in the future, and shareholder benefit program could grow, and this should be looked at seriously. So accounting rules for those that accompany stocks have not been clear. Therefore, with the emergence of SEOs, shareholder benefit programs we have had, and perhaps we should have seriously consider accounting treatment of shareholder benefit programs. But the SEOs have laid bare the need for clear accounting rules for shareholder benefit programs and other things that would come along with SEOs, issuance of SEOs. If you deliver a physical with a token, then the consideration will be paid in the form of token, and that is an emerging trend. In a nutshell, when you issue an STO, whether the consideration is paid in cash or paid in crypto asset or stable coin, payment of consideration by crypto and stable coin could materialize, and crypto asset and stablecoin accounting treatments are not clear. So in receiving consideration in the form of crypto and stablecoin, how should be treated from an accounting perspective? Perhaps it should be treated as foreign currencies or marketable securities, or should be treated as a cash. There could be different approaches in terms of accounting treatment, but these rules have to be clarified. And the third question is the need for clarifying those issues. The fourth question is holders of a token. What kind of accounting treatment should be used by the holders of token, as mentioned by Kawai-sensei? Infinitely transfer has not been assumed because it has not been assumed that SEOs will be traded continuously and change hands. So fair value has not been considered. However, if SEOs were to be infinitely transferred and traded and change hands, the net recognition, gross recognition have been the options in the past, but going forward, if we are to assume STOs to be traded infinitely, then fair valuing could be a possibility. If retail investors were to become the holders of token, and corporate entities could become holders of token, but then the accounting treatment on the holders of the token side will become increasingly important. So these are four questions. Are important questions accounting-wise. That is my understanding. So far, what are the discussions that have taken place? And it's on this slide. We are not expecting clear set of accounting rules for some questions, but for the first question, maybe it would be difficult to determine accounting treatment for each type of entities. So that's the possible response for question one. And if we were to see an emergence of token economy, then how to account for utility portion if we become prescriptive, then it could be consequential. And for the question, for the third and the fourth question, do we need to rush to come to a conclusion? So the overall direction is for question 3 and question 4, or the direction is not to come up with a clear set of rules. But we are mindful of these questions. So to address some of these questions, it may take a little longer. But in building practice, these questions will surface again and again in the future. Despite, although there might be no immediate response to some of these questions. So with that, I would like to conclude. So what about issues and challenges in practice from the tax perspective? Kobayashi-san, could you start your presentation? Thank you for having me. From a tax perspective, for STO, basically, there is no definition of STO or security token. What is the underlying for the issuance of STO is the only viable perspective that we in tax can take. Tax is in catching up. Accounting has caught up, and it is now we in tax who are trying to catch up. So irrational situation we frequently face because we are behind the curve. But the only thing we can do is to catch up by way of amending tax law. The securitized security token is what we are looking at. In that context, the definition of marketable securities under tax law is slightly different from the definition of marketable securities under FIEA. And this is a schematic image for you to understand the difference. Definition of marketable securities in the tax context is a stock certificate, beneficiary certificate, trust beneficiary certificate, and interest in LLC. Interest in LLC has been treated as if they were stocks. So these are marketable securities in tax context. But other than those, for the tax purposes, others are not treated as marketable securities. So if those in blue are to be securitized, those in blue will be applied with marketable securities tax law. But those in white boxes, we are not expecting them to be traded infinitely. Therefore, we need to apply a different set of tax rules. Now, existing tax rules for marketable securities. In a nutshell, there are three set of tax rules. Calculation of capital gain has been very simple. The difference between purchase price and sales price will be calculated and multiplied by tax rate. So it enables a very convenient calculation. If the number is high, then first in, first out, or averaging, there could be different approaches, and it could be rather complicated. But basically, it's not that difficult and complicated. The gap between sale and purchase will be recognized as gain. So that is the existing tax rules for marketable securities. And what makes it possible is that gain or loss on the part of the issuer will not directly belong to owners. So it is only when you pay money that you recognize gain. So the holders of security certificate, no matter how much income or the profit that the issuer might enjoy, the mere fact of your holding a share will not result in your having to pay a tax. It is only at the timing of receiving cash dividend, that the holder of the security will have to pay tax. It is also true for corporate bond holders. The mere possession, ownership of corporate bond will not be taxable, but it is only when you receive interest you will be taxed. And the issuer accumulating income, profit. In the case of shares, the company has a say, can make a judgment as to whether to pay a dividend or not. And dividend will be paid only after tax. So it is only after tax profit that you can retain. And whether you pay out dividend from the retained earnings or not will be dictated by the will of the company. In the case of investment trust, maybe I should start with corporate bonds. In the case of corporate bonds, paid interest will be expensed. and there is no room for discretion. Therefore, the interest paid, will have to be recognized, and those bondholders will have to recognize interest paid. The receivers will recognize gain, and the payer will recognize it as a loss. In the case of investment trust, the investment trust is corporate tax exempt. For these entities, securities issued by these entities basically cannot retain profit within the entity. Therefore, whatever profit it makes, the profit has to be disgorged to the holders. So if you are tax exempt, then it has to be made sure that the taxation will take place on the part of security holders. So that is the foundation of the existing marketable securities tax regime. Now, what are some of the issues? As was mentioned by Kawai Sensei, ERTR, electrically recorded transfer rights, is an issue. As I said, interest in LLC has been treated as marketable securities for tax purposes. Therefore, even if it's tokenized, it can be treated for tax purposes as an ordinary marketable security. So this will not be this will be a no-brainer. But a tokenized interest in NKTK or interest investment in a trust beneficiary certificate or securitization of properties. From a tax perspective, interest in TK, relatively speaking, can be easily handled for tax purposes. The reason why I say is that the partnership asset and ownerships are separate. Therefore, the partners of TK right to distribute profit and loss are in the hands of the member of TK. The operators, the TK operators' assets will not directly pass through. So if this were to be tokenized and traded, I'm not saying that there will be no issue, but even if there were to be issued, a minor change would do. But in contrast, for NK and pass-through beneficiary certificates, and if they were to be tokenized and to be traded widely, infinitely, then beneficiaries and partners will be treated as if they hold the assets. And if you want to keep this design framework, the existing framework is not based on the assumption of this being traded widely. So perhaps if we were to assume frequent trading, then we might want to reconsider this framework, or maybe another option is to apply the rules that already exist. So it is a legislative question that we might have to address. Now, this is a summary of purchase for marketable security at the time of acquisition. You have to capitalize purchase price plus ancillary expenses, and on the balance sheet date, there are some assets fair valued. However, in principle, acquisition price equals carrying amount, and at the time of sale, we will calculate gain loss on transfer using either moving average or weighted average. Meanwhile, a pass-through, the trust assets will be treated as if the partners own the asset, and this could be rather problematic if we were to apply the existing tax rules. And this slide looks at the possible issues on the side of issuers, and this issue was discussed heavily at the time of ISO, but if we were to treat equity, then there is no taxation, there is no obligation to repay. to satisfy the needs. But if this were to be treated as liability, then there will be an obligation to repay. And if you were to be treated revenue, then it will be tax without obligation to repay. Basically, we have to align with the treatment of underlying. So that concludes my presentation on issues from a tax perspective. Thank you.
Thank you very much. So we only have a few minutes remaining, but we would like to conduct a Q&A session. So please allow me to ask a question to Mr. Kawai. As I said, accounting-related issues remain around the peripheral elements of STOs because that will have an impact on the varying accounting practices. So with regards to the cases that you are looking at, what is your experience and how is that considered legally? So as Mr. Sekiguchi, you said that you talked about, for example, shareholder incentives or usage rights. So when a corporate bond is issued and the issuer attaches, for example, points to be used on the company's services, or a real estate STO, for example, the dividend is derived from the rental revenue, but token owners, if they can also be additionally used to use, for example, the resorts or hotels held by the company, then that is one direction. And how that should be addressed legally, there are various issues. For example, in the case of a corporate bond, if the incentives are given as part of the dividend or if it is separate from the interest payment, that is, I think, one key point. The current law is based on monetary payment. So if the interest is paid out in points, then whether this is possible or not, I think will be quite complicated legally. I'm not saying that it is not possible, but it will be quite complicated. But if it is just an extra gift or incentive, perhaps it could be a part of the another act. And for the mutual trust, where the gains need to be returned to the holders, if issuers use ISBC, and if perhaps the companies can attach that additionally as a gift.
Thank you. I know that we are running out of time, but Kawai-sensei, I have any questions to ask? I have this question to Kobayashi-sensei. Earlier on, there are things that can where you can trust the certificate and interest in TK. There is no withholding. So in absence of withholding, in the case of individuals, you have to file returns yourself, yes. If you were to put the whole building into a trust account, when you establish a TKGK, you issue beneficiary certificate, and that is not the security trust. So path through tax is applied. And this assumes that as if the underlying asset is in the hands of the person. So you have to implement depreciation, and you have to file a tax return yourself before you pay tax. If that is the case, maybe you have to amend the law to align, or KPMG could provide a service to make a progress? Yes. If we were to assume that this will be traded widely, infinitely, obviously services could be offered, and I don't know what the services can be offered, but we should be serious about extending such services.
So there are still many topics that we wanted to discuss, but due to the lack of time, we would like to close the session. This was a rather difficult topic, but legal or accounting and tax issues are essential for the success of STOs. So I hope that our discussion today can contribute to you. Thank you very much, Mr. Sekiguchi, Mr. Kawai, and Mr. Kobayashi. With this, we would like to close the session on legal, accounting, and tax issues in structuring STOs. With regards to Hall B, all the sessions have now been completed. Please remember to bring all your belongings with you. Also, in Hall A, starting from 6:20, we will have begin co-chair fireside chat, the road to blockchain. And from 7:05, we will have closing remarks. Those of you joining online, please select the URL for Hall A, and I hope that you will continue to stay with us. Also, one request to the online participants. You have entered the ID in order to access. And on that page, there is a very simple questionnaire for today's sessions. Please share with us your comments and feedback. Those of you who have answered the questionnaire, the entry ticket for the FinSum scheduled for March next year will be gifted. The more questionnaires you enter, the higher the possibility that you will win the ticket for the next year's FinSum. Thank you very much once again for joining the Blockchain Global Governance Conference, FinSum Blockchain Business. Thank you very much.